My model is still that we go to 250, and then we have a 50% correction. But one thing that also truncated the cycle in this particular thing was this whole notion, and I'm angry at a few of the larger influencers for pushing it, that these Bitcoin treasury companies were just free money machines, and that, you could basically sell at a premium, increase your Bitcoin per share and wash, rinse, and repeat forever, never accounting for the fact that the premium could disappear. And, that hurt a lot of people. And so, and there was a lot of money that probably there were some OG Bitcoiners. I know of a couple actually who sold some of their Bitcoin and to dump it into treasury companies. And, it turns out if you bought those at big MNAVs, you're now coming to learn why banks only trade at 1.5 to 2 times book value.
Hey guys, welcome to Everyday Finance. In November 2025, Bitcoin has continued to fluctuate, falling to about $85,000 after reaching a peak of $126,000 in October and momentarily challenging support at $82,000 due to liquidations and cautious mood. Because of low trading volumes, the market has remained range-bound, with prices ranging between about $80,000 and $110,000. Analysts point out that greater liquidity and participation are probably needed for a significant shift. Bitcoin is still seen as a crucial asset in times of financial strain, even with its recent decline. In a recent interview with Bitcoin Bram, James Lavras stressed that volatility is a normal byproduct of a financial system driven by debt and liquidity, while Lepard called Bitcoin a liquidity alarm, rising sharply when liquidity expands and falling more quickly than gold when it contracts. Together, they contended that the current selling pressure may be a precursor of a more significant market event to come, and that the price behavior of Bitcoin reflects broader macro liquidity problems.
So all these things are going on, which would, buttress our thesis. And, obviously the gold price is responding quite well to all those things. And that's because gold is more widely distributed, and it's always very good at sniffing out monetary debasement. And there's a very comparable period in 2018 to 2020 where gold moved first and then Bitcoin followed harder. And I think we're in one of those periods. And to me, remember, Bitcoin is kind of the perfect liquidity fire alarm, and it tells you how much liquidity there is in a system to an extent. And it soaks it up. If there's too much, it soaks it up and it goes up a lot. And by the way, when there's not enough, it's also more sensitive than gold, and it goes down more. And so to me, the fact that Bitcoin is drawing down is a very good indication that we're getting closer to what I think is going to be a trigger event that's going to lead to the big print. And I think James has written about this in his newsletters. And, whether it's tomorrow or 3 months, 6 months, I can't imagine it's 12 months. It could be, but at some point in time here, for instance, let's just talk about the central bank, right? They've already said, and they're trying to normalize it too, Bram. It's very interesting. They've already said, hey, we're going to have to grow the balance sheet. Powell said it, Lori Logan said it, the president of the New York Fed said it. So, and they're trying to make it sound like, and it's no big deal. And by the way, it's not QE. It's not QE.
Yeah, exactly.
Last time I checked, if your balance sheet's growing, that's QE.
Right.
No, and not taking it out. And so they're very, very much trapped. And then, I think the other thing that the market's doing, the gold market anyway, and I think Bitcoin will follow, is that they're front running what they know will be a change of the guard of the Fed. Powell gets out of there in May. His last press conference, he looked really scared to me. He was very nervous in the first few minutes. He got his footing after a while, but he's got to be thinking to himself, God, just please get me out of here before this whole goddamn thing blows up. Yeah, no, I completely agree. And so, and to his own, to give him some credit, he admits he's trapped. He kind of says, look, the risks on both sides of my mandate, and they're just trying to skate down the middle. But, I think eventually something will break, because that's the history of it all. I just gave a presentation where I just showed the parabolic growth curves of money supply, and how every time that they get off of that curve, they have to come back and print. And they hopped off it in '08 and they had to print. And they hopped off it again right before COVID and they had to print. And we're right back where we were at COVID in terms of the position of the money supply compared to that parabolic growth curve. So, that doesn't mean it happens tomorrow. As I say, I think a year out is a very generous estimate. I think it's likely to happen much sooner than that. But we do know that when they do finally admit what we all believe and know, and what mathematically really is kind of a certainty, then, the markets and the world will wake up and go, oh yeah, they can't really stop printing, can they? Oh yeah, what are some things they can't print? And, gold's already smelled it, and then Bitcoin's going to take off like a rocket ship. So pattern before, and this is exactly what happened in 2008. And 18 and 19. There was the repo blowout in 19, then COVID in 2020, and gold was taking off like a rocket ship, and Bitcoin sat there flat as a rock, slightly down. And then one day it woke up and it went from 10,000 to 60,000 in 5 months.
Yeah.
And it was kind of like, oh, I get it. And that's what's going to happen. That's what's going to happen here. I don't know if it's going to do a six-bagger, but it's going to go up a lot. I would also like to add, not supporting the gold side, and just the overall macro picture that's positive, is that our trade now has a name. It's the monetary debasement trade. JP Morgan coined it that. And now Mohammed El-Arian and all these other elites are out there talking as if they invented the idea. Of course, there's some of us who've been saying this for decades, and it's unusual. I mean, things that happened recently that I would never thought I would see happen. How's this for one? Morgan Stanley, one of the biggest wirehouses in the country, high end, with trillions of dollars in assets under management, changed their model from 60% stocks, 40% bonds, to 60% stock, 20% bonds, 20% gold. And I was like, what?
Wow.
What are you talking about? And one of the gold guys did the math and said, well, if all of their clients actually followed that recommendation, gold would be at $12,000 tomorrow, because just given how big the Morgan Stanley asset base is. I don't know if he did the calculation right, but the point is, this is a very large change in sentiment. And so what's not happening, though, is, Bitcoin is the most sensitive to the liquidity piece, and liquidity is being drained. And so the other thing we need to have happen, I know James agrees with me on this, is we just need to have all these other crypto shitcoins die, because there's a certain amount of, we're getting yanked around by them, because there's some Bitcoin holders who are only holding Bitcoin as an interim between their punts into Solana, and, now the hot new one now is Zcash, and all these are just pump and dump bullshit. But, when those things go down, some of those guys have to sell, and they have to sell their Bitcoin. So, it's all tied together in the liquidity swamp. But, throughout it all, Bitcoin just keeps ticking away, a block every 10 minutes. And, I have no doubt that we'll be at much higher prices. I have to say, I am surprised. I thought pretty likely we'd be at 140 by the end of this year. And I'm with James. I think the 4-year cycle is over. I think the 4-year cycle was kind of driven by the halving when the rewards were bigger. Now the rewards are so small compared to the IBIT buying and all the other stuff. I just don't think the 4-year cycle matters. I think there will be cycles just driven, like there are cycles in every market, just driven by fear and greed. And people will get levered up and get way too far out over their skis. And then, of course, things will correct. And so my model is still that we go to 250, and then we have a 50% correction. But one thing that also truncated the cycle in this particular thing was this whole notion, and I'm angry at a few of the larger influencers for pushing it, that these Bitcoin treasury companies were just free money machines, and that, you could basically sell at a premium, increase your Bitcoin per share and wash, rinse, and repeat forever, never accounting for the fact that the premium could disappear. And, that hurt a lot of people. And so, and there was a lot of money that probably there were some OG Bitcoiners. I know of a couple actually who sold some of their Bitcoin and to dump it into treasury companies. And, it turns out if you bought those at big MNAVs, you're now coming to learn why banks only trade at 1.5 to 2 times book value.
Since a record number of dormant wallets that had been idle for more than 10 years returned to the market in 2025, unloading billions of dollars worth of Bitcoin. Recent price behavior has been significantly influenced by the selling of long-term holders. Despite general optimism fueled by more lenient regulations, increased institutional participation, and the adoption of ETFs, this round of OG selling has taken place, showing persistent liquidity anxiety and general macro conditions. As their supply satisfies demand from new buyers and institutions, many early investors have opted to lock in profits at crucial psychological levels, such as $110,000 to $125,000. This has caused volatility. Bitcoin's behavior this year has been further complicated by altering global dynamics, such as central banks favoring gold over U.S. treasuries amid geopolitical uncertainty. This tug of war between distribution and accumulation has also affected price momentum.
The same numbers for gold. I mean, gold is 27 trillion out of that trillion, 100,000 trillion, or what is it, a quadrillion? So gold is 2.7% of total global assets. And, here you are, you've got these central banks that are just completely out of control. You've got this monetary system that mathematically has to create more debt and money, or else it's going to implode. I mean, it just doesn't take that much, Bram, for the bonds, the equities, the cash, the real estate, for all these people to say, gee whiz, I got to get out of these things that are getting, real estate not as bad, but particularly bonds and equities, I got to get out of these things that they can print and into stuff that just can't be printed. And so that gold number is going to go up a lot too. I mean, that 2.7%, if you go back to like in the 1980 time frame, it was 5 or 6 times that amount. I mean, depending on how you measured it, gold was, 15 to 20% of global financial assets at its peak in 80. At that point in time, it actually covered the U.S. money supply. And by the way, we could be headed there again. And I guess that's the point I would make. One of the things I want to say about what I said earlier, I said this is a monetary debasement trade. That's really wrong. It's not a trade. Okay.
Not a trade.
A trade implies that, oh yeah, I'm in this for a while. And you're seeing that now. You're seeing you're seeing some of these Wall Street types. Oh, look, I bought Bitcoin at 60, it's at 100. I feel good. I made 100%. I'm out. No, wrong choice. Where are you going to go? It's a monetary debasement trend. And what I think people are going to be shocked by is how, 2 years, 4 years, 6 years, 8 years from now, gold's going to follow, the path upward towards, 6, 8, 10, 12. I mean, I could easily see $20,000 gold. And, Bitcoin's going to go 150, 200, 250, 300, 400. I mean, Power Law projects that Bitcoin will be at $1 million in 2032. And I think that's probably right. It might be conservative, if we really have a big financial accident and they print a ton of money. So, to me, these are just, all you need to know is that both of these things are going up and to the right for many, many years. And we're probably in the second inning of at least a 9-inning game that might go into overtime. So, or extra innings. So, another thing, stat that I'll cite, because I cited it in this presentation I just gave, it just blows my mind. It tells you what James is talking about, how when we grabbed that sovereign debt when we grabbed those bonds from Russia. So since 2020, when COVID hit, in bond terms, Bitcoin is up 2,000%, 20x. And in gold terms, gold is up 277%, so almost 3x. So that's 20 years. That's the past 5 years. So that, to me, those two charts are prima facie evidence that we are in a sovereign debt crisis. And it's being expressed by these two alternative forms of money and how they're just kicking the ass on, of government bonds, because nobody wants those bonds. It's the best one if you can handle the volatility. And I mean, and that's important. That's an important point to make, because, I put some people into Bitcoin at 65. It went to 15. They got mad at me and they sold it. Do you know what I mean? And so I've altered my pitch when I'm, and I have my clients. I run a gold and silver stock mining fund. So my clients tend to be older, more conservative, and they ask, but a lot of them understand the Bitcoin thesis. And they ask me, how should I get in? How much should I buy? And I said, well, I think the way you look at it is this. We've had multiple drawdowns that have been big. some as large as 70%. I don't think we're going to have any more of those, but we could easily see 50 or 60. I think what you put into Bitcoin is a number where if the got drawn down 50%, you would say to yourself, oh, that's a drag, but I'm going to buy more, instead of saying to yourself, oh shit, I made a mistake, I'm going to sell it. Because if you hold it for 4 years, you're going to be money good on it again, right? But you have to, and so you're 80 years old, you're not going to take your net worth and put it into Bitcoin. You don't want that roller coaster ride. But you might want to put 5% of your net worth into Bitcoin, because if it goes down 50% and you lose 2.5%, I mean, one, you're not going to lose if you keep waiting, and two, that's something you can absorb and it's not going to freak you out, right? Still trying to figure out what it is. And so one day it's going to the moon and you never get enough of it, and the next day Bitcoin is dead. And, I remember this very clearly, looking at Amazon as a comparable, because, we all know what Amazon is today. It's the leading seller of goods and services online. But it wasn't always that way. It started off just selling books and expanded into other things. And it had a drawdown of 90% after 2008. It had multiple drawdowns of 70, 50, whatever. And yet, if you're Bill Miller and you're smart enough to buy those dips or at least hang on during those dips, the stock has gone up 212,000% from the time when it went public, right? And it's also a network business, which as Bitcoin's built on the network. It's a protocol that is the network protocol, and protocols are winner-take-all phenomena. And so, we kind of, to me, it's just I'm very comfortable knowing what's going to happen here. And honestly, with a lot of people, I think they're watching the price too much. There are days when I don't even look at the price. I'm just kind of like, whatever, and my wife said, what did it do today? I'm like, I don't know. Well, what's going on is there's a very healthy debate about what it's worth, right? That's what's going on.
Yeah.
Those of us who own it and believe in it, we know it's worth a lot more than the price right now in 5 years. And those people who are selling it, they don't believe that. They're taking the other side of that. Fine.
Yeah.
By the way, some of those sellers are paper sellers. In spite of all these positive developments, there's probably a pretty good sized derivatives market. I haven't looked at it recently. I've been meaning to do that, but there's a futures contract on Bitcoin, and you can come in and sell Bitcoin you don't have in a contract to somebody who wants to buy the other side of that contract. And, if you're stupid enough to do that, too bad, because you're going to get your face ripped off because, when it moves extremely quickly and you have a hard time covering it. But there are a lot of games going on. The reason I can relate to that is because I've seen that in the gold market for a number of years. There's been a lot of paper gold created, and they're starting to create a little bit of paper Bitcoin. And sadly, this is part of the process of when you get all the Wall Street firms involved, you get everybody buying it, you get it to be widely accepted. This is what happens. But I got to tell you, it's getting to be really widely accepted. I had some skeptical friends. I have a skeptical friend who's close to being a billionaire, and I was trying to get him to buy it at 5, 10, 20, not a bite. And he just came to me and said, how do I do this? I want to take a 5% position.
Drawing comparisons to 2018 to 2020, when gold surged first due to concerns about currency devaluation, and Bitcoin followed with a significant gain. Lawrence Lepard contended that the macroeconomic environment currently supports the monetary debasement trade. He sees indications of a similar situation now, citing Morgan Stanley's move to allocate 20% of its portfolio to gold as proof of shifting institutional sentiment. In spite of this, Lepard highlighted how sensitive Bitcoin is to liquidity limitations and pointed out that speculative altcoins frequently cause price action disruptions as money shifts between risk levels, citing changed mining dynamics and institutional engagement. He questioned if the conventional 4-year cycle still holds true while laying out a potential 2025 price goal of $220,000 followed by a steep fall. Lepard advised cautious investors to consider Bitcoin as a long-term allocation with a moderate portfolio weight rather than a short-term move, warning that inflated stories about Bitcoin treasury companies undermine credibility. He ended by emphasizing how since 2020, both gold and Bitcoin have performed noticeably better than national debt, underlining the persistent debt crisis that is fueling demand for alternative value stores.